All right, let's move on to trade management. Okay, so this is what exactly we're saying today. This is a 30-minute chart. It's now negative, but the 1 hour is not. And that is our growth cycle. And then this is, of course, our growth channel. I'm sorry, not cycle. The labels are probably correct. There's a 1, 2. There's an internal 1, 2, or 3. The market did either a 4A and a 4B and is now doing a 4C that will bounce at the top of internal 1 or at the lower boundary of that Elliott structure. Or actually wave 5 is finished. This wave 5 here is finished. Overall wave 3 is finished. The market could do a deeper bounce. This is high degree 3 is finished. We'll test, of course, that internal level 1 here. That internal level 1 here can take you all the way down to 115.24, 115.2. So what we would consider to do very vigorously is to buy 115.5 above level 1, internal level 1, double at 115.3 on spikes. If we don't get to see 115.3 and begin to see positive momentum today, all right, we double at whatever level we have a momentum confirmation. Complete our size. For short-term traders, our stop is just below level 2, which is 114, actually 0.9. If you're going to be doing level management and we now understand the kind of level that we're standing on, anything you buy in this chart means or shows, confirms that anything you buy into this market, if you are patient enough, should be making you money at 117 and 117.6 and even 118 if you just have a stop at this red arrow here below level 1. The move will complete to level 3. You just took out of, broke above level 1 and 2. You're going to level 3, 117.16, or sorry, 117.62 before you go back to test level 1. This is the cycle advance. This is really the most important element that this chart confirms. Everything, of course, is subject to right and wrong. It could be an incorrect assumption, but it is probably, it has a high degree of opportunity and probably correction, or it is probably correct. So again, anything we buy into the cycle now with a stop at that red arrow is looking at 114.9 fixed stop or even level management. Once you break that, because this is a very, very volatile market, there will be a bounce again because the market will revert to the mean and revert to the original cycle that it is actually trading. It will have bounced at an internal level 1. Anything you buy here should take you to 117 before you see a deeper correction to higher degree level 1. All right, today we could expect to see either a head and a shoulder or double head and shoulders or deeper head. It will still be a double inverted head, of course, and shoulders. Whatever we're buying as a strategy now, this is a trending issue, we take profit at the neckline. So we're going to buy 115.5, 115.3. We take profit at the neckline. Neckline comes in at 116.2 now. Okay, the only time that we will not adhere to this rule is on fundamentally driven days. Tomorrow is NFP day. Okay, so of course if we have both 115.5, 115.3, if we manage to buy these today, we will let the trade run, because you could have a very strong number. The dollar will rise very quickly against the yen. We will only take profits at 117.6, this level here. All right, at that point, if there is no strong breakout, then we're buying this 4C. You would just take profit at the neckline. Or 127, you will always find this now on any trending chart on a daily basis. We'll always take profits if we break that neckline. 127.2, 138.2. So whatever we bought at 115.5, we take it to 116.65. This is only the realistic actually profit, 115 points higher. At the most, if it's a very volatile day like tomorrow, NFP day, maybe we get 116.7, or 116.7, it's about 150 points, of course, or even just 125 points, sorry, 125 points higher. These are really the realistic targets. At that point, next week, there's going to be, of course, a correction back. You're at the top of the channel. You go back to 50% of the channel, bounce at that neckline now, and move higher to 117. We will want to note that the breakout high for the week is 115.97. A break above this tomorrow would mean you need a strong NFP number. More importantly, whatever you're buying, then we can hold on to next week because we're still in the month of January. Of course, 116 is that 117.97 that we're seeing here. Let's take a look at the monthly levels. You're looking at 116, then you're looking at 116.66. This is where our targets are. We're just looking at targets here at 116.76 and 116.64 on that 30-minute chart. Okay, so our most appropriate target next week for the current entries, if we are able to do them today, is going to be 116.66. Of course, 117.32 will only be seen if there is a strong NFP number. Right, let's roll. Let's go live. 115.68. Okay, this is the 1 hour chart. We'll go now down to the trade management itself, which is 30 minutes or even 15 minutes. We are still in a protracted degree 4C. All right, we're gonna get these levels because of this momentum plot, we think, and you could also segregate the internals using, of course, a 15-minute chart. So we are really looking at that C. So remember, this market already did a 4E and a 4B, maybe a 5, probably it's a 5 because you're having now a wedge. So it would look like this is a correction of a degree 4, higher degree 4, that will bounce at that level 1. Okay, so I don't want to change the label just in case that's not really the case. You're having an A and a B, and there's gonna be a 1, 2, 3, 4, 5, a C, which is a wedge. Maybe just take us to 115.5 and it spikes into 115.3, our buys. Of course, if we don't see these levels, we go long on momentum reversal on the 15 minutes, supported by the 5 minutes. Of course, then you would want to see degree 3 on the 5 and degree 1 on the 3.